Hi there, Salena Kulkarni here with another episode of the Alternative Investing Podcast. My mission is to help business owners build high-performance wealth that delivers reliable, predictable cash flow through unconventional strategies so they can fast-track their path to financial freedom. Each week I share with you the strategies, expert interviews, and real people's stories around the topic of wealth and financial freedom. And if you're a business owner who wants to learn more about financial freedom through alternative methods, please head over to my website, freedomwarrior.com.au, where you can access my library of articles, interviews, and programs to help you on your way to becoming more financially free. Hey guys, Salena here. In this episode, what I want to do is talk about the elephant in the room, which is the whole country seems to be falling in and out of lockdown. And the reality is that the interruption to people's incomes could be anything ranging from devastating through to maybe mild. But any which way you cut it, if you are not thinking about your plan B, or if you do not have a plan B, then you are going to be in some serious hot water in the years ahead. So in this episode, what I want to do is just unpack a little bit for you some of the things that you could be thinking about during lockdown. So, after Canberra having been in a bubble for the last 12 months or so, it appears that we have finally run out of luck and we too have gone into lockdown. I cannot complain because the reality is that we've had very much a bubble existence here. We've been relatively untouched. We haven't really had to wear masks. Restaurants and cafes and everyone has been business as usual. So I can't really complain about that. I'm reminded as we went into lockdown for the first time in over a year that nobody is unaffected by these lockdowns, whether it's mentally, physically, or financially. And over the last few months, I have spoken to more and more business owners who are maybe okay, maybe they're mostly on an even keel and they'll come out of this experience limping a little bit. But there are very few people who are untouched. And really what I'm witnessing is that regardless of how successful people's businesses are, they have felt really derailed mentally by the idea that, there could have been some major catastrophe that came to be that would have massively interrupted their income, that maybe they didn't have enough cash reserves in place to really carry them for too long. And finally, that, this idea that we're building this, beast, this business that we hope we can sell one day is only useful to us if we actually get to that point in time. So really today's episode for me is I guess a warning to those business owners out there who maybe feel that they have some level of immunity to all of this, but really deep down actually want to understand what could their next step be. I want to tell you a specific story, and I think the reason I want to share this particular guy's story is I think it's one of the most common stories that I have heard, not so much in terms of who he is and his personal situation, but how he has reacted and how his businesses have been impacted. So this guy was an immigrant to Australia maybe about 17 or 18 years ago. Has worked really, really hard to educate himself, pull together a series of businesses, and it has done really, really well over, say, the last 5 to 10 years in terms of building half a dozen or so very viable business locations. When COVID hit, unfortunately, he seemed to be in one of the epicenters of areas that were going to come in and out of lockdown. I won't say too much more, but bottom line, even though he was able to keep his head above water, at the end of the day, he put himself in a situation where he felt, he was losing sleep. He realized that, he had all of his feet in one camp in terms of all of those businesses were the same business in different locations. He wasn't particularly diversified when it came to other investments, and he was really, acutely aware that, he couldn't sustain too many more shutdowns or lockdowns and expect to, come through it unscathed. Our paths crossed at a time where he was really saying, look, I need to find a better plan B. And I guess, first of all, in defense of people who run businesses, I get that it's super, super hard. And so really what I want to do is explain to you how you can make small tweaks to the efforts that you put towards your investing endeavors so that you can possibly change the trajectory of the path that you're currently on and move more towards developing that viable plan B. Most business owners face the challenge that because they're so time poor, and they're often mentally drained, the last thing they feel like doing is looking at their overall financial position. But one of the most important pieces of the puzzle is that capacity to regularly do a stock take of where are you financially. What investments have you got in play? What does your personal balance sheet look like? And for those of you who are maybe unfamiliar with the jargon, if you were to exclude the home you live in, if that's off the table, meaning you have no intention of moving, and take your total asset base, investments, shares, property, whatever it ends up being, and subtract any debt that you have that relates to that portfolio, then that gives you your net asset position. And knowing your balance sheet means knowing what all those components are. Do you know what your assets are? Do you have a good understanding of what the values of those properties are in today's market? I never cease to be surprised by the number of people who hold relatively large portfolios of property and they have like no inkling of how much those properties are worth and even how much debt is owned against each property. I have an unfair advantage because I have my head stuck in my investing world all the time. But, I do think that you need to have enough familiarity with what have you got, what is happening on the debt front, are your loans optimized? But I guess the point I'm trying to make is that a financial stock take is really about looking at what have you got, what's and all, and then being able to put that data into some kind of tool, like even if it's just a Word document or a Google sheet or something, so that you can kind of come back to it and use it as the starting point to say, well, where are we now? Now, inside of my program, I'm fortunate enough to have a wealth portal that I share with my clients that allows you to plug all of your information in once, and then it basically draws information from your super fund, from your bank accounts, from your, all your sources. Like if you have property, it connects into a tool called RP Data, which gives you valuations of your property in real time. So what's great about this tool is it just shows you in real time what your balance sheet looks like. And what's great about that is that you can at all times have a very macro view of how am I tracking? Am I tracking in the right direction? Is the pathway that I'm heading towards taking me where I want to go? And if I'm really honest, a wealth stock take or a snapshot of, well, where am I now, is the ultimate starting point for developing that viable plan B. So that's the starting point. You got to know, where are we? What have we got? Then the next layer is, well, how is what I've got, how's it performing? And, in Australia and New Zealand, we tend to rush to talk about gross returns. And often when I ask people, tell me about the income on that particular property, they'll straight away tell me what the gross number is before any expenses, because that's how property is often described here. But what I'm encouraging you to do is as you run a profit and loss for your business, run a profit and loss for your investments. Do you know after expenses how much income, cash, clear and free and clear before tax you are generating from your portfolio? And when you know that number, have a think as a percentage of the total net asset base that I've got. Am I happy with that? And, for most people that I speak to, their net rate of return or return on investment is usually somewhere between -1 and maybe 1.5 to 2%. And people are shocked when they see that because they just don't track that number. They don't realize how bad it is. And I think a lot of the literature and marketing in our space tells us if we just hang on long enough that, we'll get where we want to go. But if you're listening to this and you're young enough to digest the idea that it's not too late to change paths and to change the trajectory of those numbers, then you're in good company. First thing, as I said, get yourself a bit of a wealth stock take in terms of a balance sheet. Where am I? Then do your profit and loss. Say, like, really, if this were my business, if these investments were my business, how would I feel about it? We're so much more brutal about what we expect from our businesses. So many people I speak to have the finger on the pulse of where money flows in their business, what percentage of their income they're spending on payroll, what percentage they're spending on materials, what their average profitability is per week, per quarter. People are all over that stuff. But when it comes to their own personal finances, they've just simply got no idea. So that's a really, really important starting point. Once you've established whether or not you're happy with the profitability of your asset base, then you can start to make some decisions about, well, what am I going to do about this? One of the things that kind of goes hand in hand with that is that, taking control of your own decision making. But I would say to you that if you are in some kind of lockdown right now and you're trying to find ways to make things better, I think the last thing you want to do is put yourself in a situation where you are forced to sell down your assets to eat the cow in order to navigate and create enough of a buffer. A really dear friend of mine whom I have, I wouldn't say pushed, but he is like a little brother to me. I've certainly encouraged him into a bunch of investments over the years, and all of those investments have done really, really well. But because of the nature of the business that he runs, he made a fairly smart decision, I think, in hindsight, to sell a couple of assets at the beginning, just before COVID settled in. And what that did was give him a really good cash buffer to navigate what would otherwise have been a horrific 18 months. So it's not the ideal outcome, obviously, but I think there are always going to be situations where, you have to sell an asset to get yourself out of hot water. But as part of your strategy, it's definitely not one that I would recommend. Because, if we're talking about trying to create wealth that endures, then building your assets to a point where then you can just, sell them down or live off them kind of flies in the face of that. So I just want to flag that for you. I guess the final piece that I wanted to really share as part of this particular podcast is that, going into lockdowns and having a lot of turbulence and uncertainty around, what happens as far as the economy and in your business goes, should really be the opening or the starting point for having conversations with people about what else is out there. I certainly advocate that there has never been a better time in history to be looking at alternative options when it comes to investing that could give you a level of insulation against future turbulence. So that regardless of what happens, whether the market goes up, down, or sideways, whether you have continued flow of business or whether you suffer from massive business interruption, you put yourself in a situation where that secondary income, that passive income, is what gives you that sleep at night factor. So guys, look, if I just want to quickly summarize again, please find a way, find a tool to create a snapshot of your balance sheet, a financial stock take to tell you what you've got, where it is, and then you can start to dissect how you feel about it, but make it a diarized appointment to go in and have a look at it at least every 6 months. Obviously, with everything that's going on right now, that could be tough, but we're talking about an exercise that you could potentially just do over a cup of tea. It doesn't take a lot of time. it simply just takes a little bit of bandwidth and some mindfulness. If you would like some help with any of this stuff, or if you have questions with any of this stuff, send me an email, reach out. I'm happy to share a Loom video if I can, if there's anything that I can kind of add. I think in terms of the components of how you analyze what you've got, how do you check if you think it's performing well or not, is really the topic for another podcast. But I think simply even recognizing that it's time to put your finger on the pulse is going to immediately separate you from what most business owners do, which is turn a blind eye to it until it's too late. So anyway, guys, awesome to connect. I hope this has been useful and look forward to catching you next time. Thanks so much for listening to the Alternative Investing Podcast. If you're a business owner feeling frustrated that despite doing everything right in the property investing playbook and you're no closer to financial freedom, then head over to freedomwarrior.com.au to learn more about how you can use alternative investments to catapult your investing income and blend strategies to shave decades off your timeline to financial freedom. Till next time, take care. See you on the next episode, and bye for now.